Welcome to TradeTheMBI.com and our ongoing tutorial of the extreme histogram and how to utilize it in your trading. You know, often I've been asked, John, you recommend buying on some of these dips. How do I know that that is just not trying to catch a falling knife? And in fact, there are times where it is a falling knife if you don't know from where the knife is falling and where it has to fall to. And I would propose to you that the extreme histogram gives us the targets that we can expect the knife to fall to, land, bounce a little, and then merely just have it drop into your hand softly. And this period of time that we're looking at happens to be, well, the end of 2010. Market had come down, we had dipped below the red line, popped back up, and then on a much higher histogram all the way up here at this cyan line, very bullish setup, retraces the low, and that is a beautiful buy opportunity, and you can see that immediately price just escalates. So we go ahead and mark that low down at 1171 because it will be pertinent, because it didn't quite touch exactly down to that low, which means this still needs to be retraced sometime in the future. And sometimes that can be months down the road, but you always keep any unsatisfied dips below the red line as a floor. This is where you would expect the knives to bounce off of. And then what we start doing is we start ending up with shelves. And those would be where we have the histogram go positive. And what these represent really is areas where large buyers have set up positions to move the market in a particular direction, knowing full well that they intend to bring it back to these setups. And these lines become very specific. Now, oftentimes you'll get areas where they pop up and an immediate retest of those areas. In particular, this one right here, within a day or two it had the retest of that, but nowhere near the other areas that needed retesting. Now, why would I not think that this is going to be a dip all the way back? Because we have additional indicators that we're using beyond the extreme histogram to give us an idea of when we want to be thinking about making that play to the short side. Nonetheless, the market increases and moves along, and then finally we get to these areas where it really pops up into the histogram, and then finally up here at around 13, well, that close was 1336. The market finally was at a point where our shakeout indicator and some of the ratio histograms were saying it's time to get out. And then lo and behold, the market takes a little dip. Now, look at that decline below the red line. There's a huge move below. Do I automatically think that this one is going to be heading lower? No, because we don't have the readings from the histogram that would justify. You would need to see 5 or 6 days. So at just a couple of days, I'm not ready to buy this because this knife is, in fact, ready to fall a little bit more. Oh, but it reverses. So am I incorrect? Well, no, there it goes, back down again. But now what you're looking at is a setup where, wow, you've made a higher histogram. Does that mean that this is a buy setup? No, because overall within that general target, you could buy one of these moves, sure, but you have to expect that it's only going to be for a day trade, or at the most a couple of days. And when you get those kind of spikes, it gives you the opportunity to short into those rises, and that's how you know when to short into a rise, because you have to have this retrace coming up, and sure enough, there it takes place. And it takes place at a fairly decent level in a higher histogram, but it's still continuing to decay, and we haven't reached any of the significant targets that we're looking for. Finally approached this one on a real quick move going back up, so we're likely to see a price rise? No. It comes down to exactly that 1249 level that we had at the beginning of the year that needed the retrace. Why did that happen? Is this a Fibonacci retracement? No. The 50% is actually much higher right up in this area, and they'll say, oh, well, it's close, it kind of followed through. Well, if it was close and kind of followed through, then why did it end up exactly where the previous raised histogram called for it to go to? And this is where, you know, it gets particularly interesting when we're utilizing the extremes histogram along with some of our other indicators to go ahead and play small moves to the upside. In this case, the MBI having dipped below and still below the red line. We know this is going to be a short, but could be swift little rally to the upside. And in fact, there it makes a nice little move and actually gets very close to a positive histogram right there, um, just within like -3, I believe. And that is also a pattern that you see constantly with the extreme histogram, where you'll get the rise up, comes to a midpoint very close to getting positive, and then rolls over to the opposite direction. Whoa, in this case, obviously it went much higher and retraced it, but you'll notice that it's rising as the histogram is falling. That is setting up a lot of these buyers for a little bit of pain. And does that pain come? Oh, it comes a little bit and boom, shoots back up again. And so they're thinking they've won the day again. Well, in fact, they had. And this takes us all the way into, well, May of 2011. And price kind of floats around here for a little bit, but still decaying and showing a lot of weakness. And there it goes. It starts to fall apart on some serious declines. And this was clearly an indication that these rallies were opportunities to get out of the market, as opposed to thinking that because you broke out to new highs that it was an opportunity to take advantage of the market. This is a good point to stop, and what we'll do is we'll probably finish the rest of the year. This is June of 2011, and we'll go through the end of 2011 and see exactly what the extremes histogram, called for. We have some of those levels that still hadn't been retraced down at the 1171 category. So look for the next installment. As always, though, continue to trade well.